So hello guys, it's Flipping Markets here. Welcome everyone in this video. This will be today's breakdown video. Okay, let's begin. Firstly, map out our structural points and the overall structure. So this is the 15-minute chart, as you can see, and our trend is still extremely bearish, right? Heading down to the daily inefficiency and keep breaking through demand zones, 4-hour demand zones, respecting supply zones, breaking through demand zones, respecting supply zones, breaking through demand zones. So this is our pattern still. Let's take a closer look on the 15-minute chart. So as you can see, price was reacting on this 4-hour demand zone, and after the reaction and rejection, impulse movement came into the market with this candle. And this candle broke this 4-hour structural zone and created a break of structure, as you can see here, created a 4-hour break of structure, right? So let's mark the zone that caused the break of structure and the zone break. Which was that zone? This one, right? And this zone has inefficiency too, and has liquidity just below it. So price after the break of this zone tapped into another 4-hour demand zone and reversed the price again. And it was creating series of higher highs and higher lows straight up to this 15-minute supply zone that caused the break. After the mitigation of this zone, price changed character, and on the 1 minute, this one could be a really good entry for short. But let me switch to the 1 minute, please. So we are on the 1 minute, and as you can see, this was the top of the 15-minute supply, and this supply zone, this 1 minute supply zone, changed character here because this was the less demand zone, and this was a perfect flip in London session. So as you can see, it changed character, swept liquidity, created liquidity, came back, swept that liquidity, bam, enter. It could have been a really good short opportunity for you. Not for me, because I do not trade London session. So, okay, let's see. New York Open was right here. So this was New York Open. Sorry. No, sorry, this was New York Open. Yeah, exactly, the trade. So as you can see, price was creating series of lower lows and lower highs straight up to the 15-minute supply zone that I just marked and show you. So this was the 15-minute supply zone, and this caused the liquidity sweep, the zone tap, and everything, the change of character. So on the 1 minute, price was heading down to this zone, this demand zone. And after the tap of this zone, it had a really huge reaction and couldn't break below this zone, but it swept liquidity. As you can see, we have liquidity here and we have liquidity here. So we had double bottoms just above this zone. So price swept that liquidity, tapped into this zone, and after that it changed character. But do not rush. Let me just clarify something, because someone asked in the group that why wasn't this a change of character and why wasn't this a change of character? You have to understand liquidity. This movement didn't sweep any liquidity. This downside movement didn't sweep any liquidity. It can't reverse the price. It didn't tap into any demand zone. So as you can see, here's nothing. Here's just the 1 minute demand zone. It won't be as strong as the downtrend. The downtrend, the main trend, is extremely bearish. So a small 1 minute demand zone couldn't hold the price and reverse the price to the upside. So it needs to tap in some bigger demand zone, for example, this one that created shitloads of inefficiency and liquidity. And if price taps into this zone, it can easily reverse the price. But these small 1 minute zones can't. So of course it was a change of character, as you can see, and it had this demand zone, but it didn't have enough power to reverse the price, because it's in the middle of nowhere. So as you can see, this is just a liquidity pool. Price have to tap in some sort of demand to reverse the price. So yeah, it had the criteria that swept liquidity, tapped into a higher time frame zone, and that's exactly enough for the reverse. Because if it sweep liquidity and reverse on the higher time frame zone, it can go straight up to the higher time frame supply zone. So let's jump back to the trade. So as you can see, we had this supply zone right here that caused the inefficient move to the downside and break structure. So price was coming straight up to this supply zone, this 1 minute supply zone, reacted on that zone. And after that reaction, it broke through that zone. So as you can see, this is a perfect flip scenario. We had this demand wick right here. And I did open the trade. Sorry, I marked the full body. I did open the trade on 50% of this candle. I did set a 1.5 pip stop loss, and I was targeting the 5 minute supply zone. So this was the first trade, and I got tagged in. So this was the first trade for 8 risk reward. Let me just show you this 5 minute supply zone. So as you can see, this was the last supply zone that created inefficiency, and this supply zone created liquidity on the way down, right? Can you see it? It had inefficiency, broke structure, and after the inefficiency, it created small movements on the 5 minute to the demand zone. So this means it has a liquidity trend line and an equal tops. So this is the only right zone. This is the only valuable zone because all of the zones above it are mitigated except this one. So yeah, this was my TP. And after hitting my TP, I saw that price was reacting on the 5 minute supply zone, especially on the 1 minute supply zone, which is up here. And after the mitigation of the 1 minute supply zone, price changed character here. As you can see, this was a change of character. And what changed character here? It is really messy, but you can see what changed character. The only unmitigated area is this wick right here. As you can see, let me just zoom in real quick. So as you can see, all of the zones above this one are mitigated. And this is the only one that had created liquidity, inefficiency, sorry. And this was the zone that caused the momentum that changed character. So this is the only right zone, the wick. And I entered on the 50% or maybe the 75% of this candle. So I get tagged in. And I did set a 2-point stop loss because I did set my stop loss above these highs. So yeah, I was targeting the 1 minute demand zone down here. This demand zone created liquidity, inefficiency, as you can see, huge inefficiency that has to be filled up. And yeah, so I was targeting this zone. Bear with me, please, while I set the colors and shit. So yeah, my TP did hit. After the break of this level, I did set my stop loss to break even, and I was barely kept in the trade. As you can see, it didn't take me out. And after that, it created liquidity, swept that liquidity to downside. And if I just quit from the replay tool, I'm sure that the upside liquidity is swept too. Just let me quit. Yeah, so as you can see, that's why I always say ranges have to be swept. Created this range, first swept the downside, then after that immediately swept the upside of that range. So that's why I say our ranges always have to be swept. It's basically a rule. So yeah, that's the reason behind the trades I took today. So I hope it made sense for you guys, and I hope you enjoyed it. Please leave a like if you enjoyed it, and goodbye guys. Have a beautiful day. Bye.